Hello traders, this is Blake Morrow and you are listening to the week ahead video for March 17, 2019. Hope you guys and gals are having a great weekend. Now before we get started, I just want to say that for those of you that came out to visit us at the New York Traders Expo, thanks for coming out and supporting us. From what it looked like it was a great time. Steve came in from Athens, Greece. We had Gregor come in from Slovenia. We had Joe Perry, who's there in the New York area. And from all the pictures that I saw, it was awesome. And I wish I was there, but I'll be there next year with any type of luck. Now, before we get started on this week's video, I got to mention that if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. And once you sign up, it's very easy to sign up. Just download the mobile application. So this way you have all of our analysis, our updates right in your fingertips, no matter if you're in front of your computer or you're out living life itself. And then you can be involved in our personal or our chat room that is only for the ForexAnalytix community. So I urge you guys to all try us out and see if you like it. It's only $1. Why not? Okay, now let's talk about this next week. And before I do so, I want you to just take a look at for the euro as an example. Look at the macro candlestick, basic technical analysis, harmonic, Elliott wave analysis. They're all neutral. That doesn't mean that we can't break out, but that should really tell you that the market is pretty range bound. And as we've been discussing the last couple of weeks about the low volatility that is near multi-year lows, it's apparent in our analysis as well. However, we do have some pretty key events happening this week with the FOMC on Wednesday. We have, you look at the Aussie and you go, wow, it's neutral in the Aussie. There's, everything's neutral. We have the monetary policy meeting minutes Monday night, Tuesday morning, out of the RBA. We have, out of the UK, we have, a possible Brexit, extension happening on Tuesday. So the volatility can pick up. Don't give up hope. Don't give up hope. I know a lot of you are like, oh man, it's going to be so, there's no volatility, but that doesn't mean that we won't get any. So let's start by looking at the euro dollar, and let's talk about like last week. So last week we talked on the week ahead, you had to be careful about being short, that little false breakdown below 112, and it did create a pop. We got a rally. We got a rally Monday, Tuesday, Wednesday, and then we stalled. Now we did stall. I think I have the chart here. Yeah, we stalled at the 618 retracement for the last couple of days, Wednesday, Thursday, Friday. You can see how we popped up above like this 113.28 level. Couldn't close above it. It's previous support, current resistance. And we're stalling. So the question is, do we break out back above 114 or do we slump back towards 112 this week? Well, with the Fed, most bank research that I'm reading expects a more dovish or doverless, a more dovish FOMC. But before you get all excited and say, oh wow, the euro is going to break out, above 114, we get a more dovish Fed. Now I can't even speak. Fed, and we get a breakout above 114. Everybody's expecting a dovish Fed. How about if the Fed comes in a little bit more hawkish? I mean, don't forget that the U.S. is outperforming, generally speaking. Better. It's outperforming more than most other economies. The U.S. economy is. So I don't think it's a guarantee that we're going to get a dovish Fed. We could get a more hawkish Fed, and the next thing you know, we're back down at 112 again. So don't get overly excited ahead of Wednesday is what I'm trying to say. But we do have a tightening range here, and we have possibly a descending wedge. which could lead us to an upside breakout. I'm not going to rule out an upside breakout, but I think we have to get above 114. A nice solid close above 114, I think, would be a pretty bearish US dollar scenario, bullish euro scenario. But at the same time, if we have a more hawkish Fed, we could be right back at 112 once again. All right, so don't rule that out either. Okay. Now regarding, let's take a look at the cable, because the pound, we do have on Tuesday, which will be, let's see, today is Sunday, so we're talking about the 19th. On Tuesday, we're looking for the UK is going to try for a third attempt to pass the withdrawal agreement and possibly even extend, the Brexit negotiations going into, the next couple of months. Well, if that's the case, is it possible that the pound, breaks above the 133.50 level, which I think is really critical? I mean, you look at this horizontal resistance, coming through the market. We're talking 133.50 to 134. We're talking also a big inverted head and shoulder pattern. Shoulders, head. Right, we get above 134 and we should trade up towards 136, maybe even higher than that, depending on the news flow. So I don't think you should rule out an upside break in the cable. Now, if the pound breaks higher, there's a good chance that it could take the euro with it. So that's also something to take into consideration, considering that this is happening on Tuesday. If Tuesday we break above 134, then on Wednesday, or and the euro breaks above, let's just say 114 at the same time, and then on Wednesday we get a more dovish FOMC, then you have a euro that could trade up towards the 200-day moving average towards 115. Also, you have to imagine that if the news flow is more favorable for the pound and the pound does break out to the upside, what is good for the UK is probably what's going to be good for the European Union as well, or at least viewed as such. So we are setting the stage for a weaker US dollar going into Wednesday, especially if things work out well with the UK on Tuesday. All right. Now, a couple other things that are happening this week. We have the RBA meeting minutes. So you look at the Aussie. The Aussie is still trading heavy. I mean, here's the daily chart. We're still trading heavy. 70 cents is obviously, for so many different reasons, it is really a key level of support. But if we are going to extend out the China-US trade negotiations into the late spring, early summer, the Aussie's really underperforming. Obviously the upside risks are if the China-US deal gets put together. I think we get a spike up in the Aussie, but ultimately any positive China-US trade deal, once it gets done, I think it's ultimately going to be more bearish for the Aussie. You're taking away, it's better for the U.S., worse for China. What's worse for China is worse for Australia. I think the Aussie is just going to continue to underperform. So do I think we eventually break below 70 cents in the Aussie? Sure. Okay. Now, if you go, well, if the Aussie is going to break down and the euro might go higher or the pound might go higher, yeah, that's when you start looking at currencies like, here's the pound Aussie, for example. The pound Aussie, you look at longer term. I mean, we could stretch our legs here bullishly up towards 195 and maybe even greater than that. I mean, there's a lot of upside in like the pound Aussie, even the euro Aussie as well. That's been confined to range, and we're held. Let me get rid of this fib. We're held by the 38% retracement, and there's a lot of upside here in the euro Aussie, pound Aussie. So that's just something to consider with the Aussie dollar. Now, I want to talk to you guys about the Canadian. The dollar Canadian is a currency that I believe, if you want to play dollar strength, this is the way to do it. I am long some US dollar Canadian for the following reasons. First of all, if you listened to the Bank of Canada on Thursday afternoon, they were fairly dovish. All right, we do have, technically speaking, we have this big inverted head and shoulder pattern. Head, shoulder, shoulder. You can also look at it as a, triangle consolidation that broke out, right? We broke out, hit 135, tested the breakout point or tested the neckline of the inverted head and shoulder pattern, and the risk is to the upside now. Like I said, I think that if you have very manageable risk reward. I mean, your risk is maybe below 132.50. Your reward is 135, 136. We're currently trading at 133.50. It's a decent risk reward for a long if you want to play into the US dollar, bullishly ahead of Wednesday. Then with any luck, if the FOMC sounds a little bit more hawkish, perhaps we continue to rally. Now, obviously, you got to take into account crude oil. Crude oil is bullish and it continues to be bullish. But if crude oil starts to give back some of these gains, that could lead us to a higher US dollar Canadian exchange rate, as the Canadian currency and crude oil tend to have a pretty decent correlation as well. Now, one of the other things I guess we should talk about is the US dollar Japanese yen. And I'll tell you, I played this is where I got hurt last week. I played the US dollar Japanese yen on the short side. I played it on the short side right around 111. I think it was like 111.30. Okay, all right. I was thinking, hey, yields are going to continue to break down. I'm going to short the dollar yen. Then what happened here is it broke above 144 or 111.50. It squeezed me out on this little push higher above that 111.50 level. That's where it squeezed me out. Now we did hit this 161% extension. We came back down to 111.50. But if you take a look at the dollar yen, any move back below 111 is going to be a fairly bearish event for the dollar yen. Okay, that's something that I'm taking into consideration, just because if you look at the S&P, where are we at? Okay, the S&P, and it's obviously still bullish here, but we closed pretty strong above this 2820 resistance. It was big resistance on Friday. We did the classic short squeeze on a Friday, getting everybody out. If we come back below 2800 in the S&P and we get what would be commonly known as a false breakout, you squeeze all the shorts out, we turn around, we get back below 2800. At that point in time, I will be looking at that dollar yen as a possible short, and a dollar yen back below 111. That's something that I'm thinking about, especially if you take bonds. Here's the 10-year. Bonds continue to go higher. Yields are coming down, and if yields come down, dollar yen tends to trade with a positive correlation to yield. So if bonds are going up, that means yields are going down. If yields are going down, that means the dollar yen is probably trending lower as well. So again, there's going to be a few key events next week. Just real quick, let me review. On Monday afternoon, which would be Tuesday morning in Australia, we do have the RBA meeting minutes. On Tuesday, we do have employment data out of the UK. We do have the another Brexit vote Tuesday afternoon. On Wednesday, we have the FOMC, which is going to be a very key event. And I guess I should probably pull up the calendar over here, since we have the calendar right over here to look at while I'm talking about this. Where was I? I was on Wednesday. So we have Wednesday, the FOMC. Wednesday afternoon, we also have New Zealand GDP. That's happening on Wednesday afternoon, which would be Thursday morning. We also have Australia employment. That could shake the tree a little bit, especially with the Aussie, below 70 cents or maybe even back above 71 cents. Then you go into Thursday, we have the Bank of England rate decision, but I think that's going to be overshadowed by what's happening with Brexit. We also have retail sales out of the UK also Thursday morning. Swiss National Bank, they meet on Thursday, but I've kind of left the Swissy alone. I was just so you know, I was shorting the Swiss franc last week, made a little bit of money. I shorted the failed breakout attempt above 101. You know, this is a multi-year trend line. We had talked about it last week, I believe. You know, a little bearish candle on the weekly chart. You know, that's a pretty bearish looking candle. Nice failed breakout, tweezer tops up there. I don't think the Swiss National Bank is going to move the market. However, if we get continued dollar weakness, this might be a play for you guys. And then to wrap up the week on Friday, going back to our calendar, on Friday here we do have European PMIs that are being released, and then Canadian. We're going to have Canadian CPI at the very end of the week on Friday. So let's hope, guys and gals, let's hope that the volatility picks up. I know for myself, I'm really looking forward to some higher volatility in the markets, because that's how we as traders tend to make more money, is when there's more, you know, whipping back and forth in price action. And guys and gals, if you found this video any bit of entertaining, or at least it's going to help you prepare for next week, give us a thumbs up on the YouTube channel. You know, just give us a thumbs up. Make sure you subscribe to our channel so you don't miss any of our interviews that we do throughout the course of the week if you can't listen to them live. And it also makes the team, you know, the team that edits this video, the team that does the analysis, and then it makes me feel a little bit better too when you give us a thumbs up. So guys and gals, have a great week. My name is Blake Morrow with ForexAnalytix, and I'll see you on Monday's FACE webinar. Thank you.